Is Petrobras a great dividend investment with its 21% yield? Is it a value trap, or is there more to the story? Well, today we will go through our 7-step analysis process and we will answer all of those questions. Petrobras is the biggest Brazilian oil and gas company, and what is very important, the government has the majority of voting rights and therefore can easily influence this company. Also, after every election, almost the entire management and board of directors changes, so it is run according to the plan of the government. And this plan does not have to be in line with us as shareholders. Because of all that, this story is a bit more complicated. If you invested $1,000 in this company 10 years ago, you bought 141 shares, and today they would be worth something close to $1,992. And this company also pays dividends. So in that time you would get $1,680 as dividends. So if we add together the current value of shares and the dividends, we get $3,672. And that is a gain of 267% in 10 years. That is a very nice result. But now let's take a closer look at this ownership structure I mentioned before. Individual insiders, that is an X, 0% of the company is owned by individual insiders. So the management does not have its skin in the game. But that is to be expected since all of them are in this company for less than 2 years. Also, the state owns 29% of shares and has a golden vote, so it can control the company. I don't know about you, but for me, that is a red flag. And of course, individual insiders are not buying. So let's see, do super investors own this company? That is a check, but with only one super investor, and it is Howard Marks. And is he buying right now? It is an X. He sold almost 450,000 shares, so that is a 9.7% reduction of his position. So let's try to find out why he invested in this company. Return on invested capital, that is an X at 2.4% 10-year median returns. And we want to see this number higher than 10%, so that is not good. And what do we know about net profit margin? It is a check, averaging 18.6% over 5 years. And the sector median is just 11.4%. So that is very impressive. And now let's take a look at share buyback. It is a check. In the last 10 years, they bought back 1.2% of shares. Nothing really meaningful, but fine. And the debt? It is a check. It would take less than a year to pay the long-term debt with a current free cash flow. So that is very nice. But financial health is only a part of the story. We want our companies to be strong, and Petrobras has some of the attributes we are looking for. But we also want our companies to grow. Revenue growth, that is an X at minus 3.2%, 10-year compound annual growth rate. But we have to remember that it is a cyclical industry, and growth rates may not accurately describe what is really happening with a company. Free cash flow growth, that is also an X at 0% growth. And earnings per share growth, that is yet another X at 8.4% in the last 10 years. Well, that doesn't look encouraging at all, but that is just the beauty of cyclical companies. One year they may look terrible, and the next year it may seem like they are going to the moon. So now it's time to take a look at this impressive dividend we were talking about at the beginning of this video. The dividend yield is 21%, so shareholders got $2.98 last year per every share. That is an incredible yield. But let's see how sustainable such a dividend is. The payout ratio, that is a check at 42.9%, and we want to see it below 50%, so that is great. We are getting over 40% of the earnings, but still the majority of money stays in the company. And what about dividend growth? It is a check at an incredible 536% 5-year growth rate. Again, cyclicality is very important here because the dividend changes dramatically from year to year, and it may also disappear at any moment. So we can't rely on those growth rates. But we shouldn't just focus on dividends when making investment decisions. Even if a dividend has an over 20% yield, we should always ask ourselves, is the price right? Price to earnings ratio is 5.3. That looks promising. What it means is that we have to pay just a little bit over $5 for every dollar this company currently earns. But to properly value Petrobras, we will use a discounted cash flow analysis. And if you would like to know how to value companies by yourself using 4 most commonly used models, then head over to stockinvesting.academy and choose our company valuation course. Okay, so first we have to estimate the growth of the company for the next 10 years, and we will make 3 scenarios: low, medium, and a high one. So in the low scenario, we will estimate a decline of 5% for the first 5 years, and then a decline of 10%. In the medium, a decline of 3%, and then no growth, and in the high scenario, no growth and then 2% growth. So the low scenario is predicting that the company will have some serious problems in the next few years, either because of the market cycles or because of political reasons. Medium is predicting that it will very gently decline over the next decade, and the high one is predicting a very gentle growth. So it seems that we are very conservative here, and that is the way we want to approach the valuation. It's better to miss an opportunity than to get ourselves into some serious financial trouble. So with such estimates, the intrinsic value in the low scenario is $27. In the medium, $39, and in the high scenario, $48. But we have to always apply a margin of safety to those prices. I use a 30% one. And with such a margin, we get in the low scenario $19, in the medium $27, and in the high one $33. And the current price is around $13. So it is all in the green. Petrobras looks cheap right now. But we still have one last step in our analysis, in which we will take a bird's eye view of the company and see how it compares with its peers. Petrobras has a very nice price and a good dividend, which unfortunately can change or even disappear at any moment. We also have to remember that the Brazilian government may influence and push this company in an unpredictable direction. And it is a very cyclical industry. So we have to be prepared for a lot of volatility. And we have to be sure that such a company fits our character and our investment strategy. If we open our Stock Ranking Pro, we see that it is the 6th cheapest company in the ranking. And if we sort it by the overall score and the valuation, so basically a score that represents the quality of the business and its current valuation, we see it is at number 22. So not bad, but it just shows that there is a reason for such a low price. If you would like to get access to the stock ranking and do your own research and compare over 100 companies we analyzed on this channel, then you can do it by becoming a Patreon. So before we end, let's just take a look at the overview of this company. Financial health is okay and the dividends look great. Unfortunately, we don't see any growth. But we have to remember that it can change rapidly because of the cyclical nature of this business. And we can also notice that investor sentiment is very low. Super investors are rather avoiding this company. As always, remember to treat those analyses only as the first step to understanding a company and always do your own due diligence. Thanks for watching and see you in the next one.